I will go ahead and start with this first slide. This is one of the slides provided by Austin Title. So Austin Title, every month they update this. They've been updating this slide for at least the 13 and a half years since I've been investing in real estate. But they show what the markets look like over the last 5 years in terms of the number of closed sales. So you can see going back to 2013 that the number of closed sales is growing year over year, but it's not a huge amount of growth year over year. But we have had some pretty spectacular months so far in 2017, and we are ahead of 2016 so far in 2017. You can tell that we've kind of topped out in terms of where we are in the year with regards to the number of sales. It usually hits its high point every June or July. It certainly did this past June. So to take a look back at the sales last month, we sold over 3,400 units, which was 4.4% more than what we sold the same time last year. And year to date, we've sold almost 3% more units. Median price right now, $314,000, 6.6% higher than what it was this same time last year. Year to date, median price $300,000. Average price, and this is Austin and Round Rock. Obviously, the area and the MLS captures is bigger than just Austin and Round Rock, but this represents probably about 80% of the transactions. So I just want to make sure you guys know what you're looking at when you look at these charts. Year to date, the average price for this Austin Round Rock area, $376,000 is the average price, which is 7.4% higher than what it was the same time last year. So far, last month, we added another 4,300 listings. Total number of active listings that we have in the marketplace right now, almost nothing says class like opening a bag of chips. Don't you guys think that? Don't you guys feel like we just classed this place up like totally with so guys, the chips have arrived. I think there's going to be some queso and salsa and maybe even some guacamole back there. I hear it's delicious. You guys, at any point during the presentation, please feel free to go out and grab some chips and salsa. I will tell you that this is the Austin Real Estate Networking Club. This is not the Golden Corral. Please remember that as you're filling up your appetizer plate. This is not dinner. This is just kind of something to tide you over. All the money that we get from our vendors and sponsors, we just put it into food back there. And then at some point, now that we've classed up the place with all the chips, at some point they're going to bring in a full bar. So it's going to go to a completely another level. But please, guys, help yourself. Enjoy it. I won't mind if you guys are crunching chips. I will just ask respectfully that if you're in the back and if you guys want to talk like the two of you or like get into a super awesome detailed conversation, if you wouldn't mind just taking that conversation right out those doors, I would really appreciate it because I get distracted. And I want to make sure that I can think, and I also want to make sure that the other people here can hear me. But please get your chips and salsa and enjoy it. The active listings right now, almost 7,700. Right now, we're selling over 30,000 units a year. Just to give you guys perspective, back in 2010, when we were at the bottom of the last market cycle, we had almost 13,000 units, but at that time, we were selling about 18,000 units a year. So we had really the effect of somewhere between 7 to 8 months of inventory. So the market has really changed, and the market continues to be very low in terms of the amount of listings that we have on the market, and very low in terms of the months of inventory right now. And that's going to continue to be the case because last month we had just over 3,100 pending sales, which basically eats up almost all of the new listings that we added in the last month. Right now, houses are going under contract within 45 days. That's the average days on market. After it goes under contract, though, it usually does take somewhere between another 30 to 45 days to actually get to the closing table, depending on what type of financing is involved with that transaction. Year to date, we're at 52 days on market as our average. If you go back over the last 40 years, that number looks somewhere closer to about 100 days. So because we have such little inventory on the market and so many buyers coming in, we're getting a lot of downward pressure on that days on market number. Right now we're at 3.1 months of inventory. This bullet point really used to make sense until this past month. We were below 3 months of inventory for the last 5 years. This past month was the first month that we actually got above 3 months of inventory. And what does this mean? So if we stopped listing houses today, based on the current buyer demand that we've had over the past year, in exactly 3.1 months, we would be completely out of inventory. Historically, this number is somewhere closer to 6 to 6.5 months of inventory. So right now we're running at about half of the inventory that we have historically gone at. Because we have such little inventory, because we have such high demand, that's one of the reasons why we're seeing these big year-over-year increases in terms of average and median price. So that's one of the things that's going to contribute to that and continue to contribute to that as long as we don't have a sufficient amount of inventory to supply the amount of demand that we have. Speaking of months of inventory, I wanted to give you guys an idea of what inventory looks like, not just on a whole, but I really wanted to break it down based on each of the different pricing levels. So you can see that on the lower price houses, specifically where we get a lot of our bread and butter right here, this $150,000 to $200,000 price range, we only have a 1.2 month supply of inventory. Again, historically, this number is closer to 6 months of inventory. On this $200,000 to $300,000 price point, we're only at 2.5 months of inventory. But as the price starts to go up, right, to get to above $1 million, you're looking at a 12-month supply of inventory. So that's something that's important for you guys to notate. If you guys are working on a $200,000 or $300,000 house, you're going to sell it overnight. But if you're working on a house that's $1 million plus, you might be holding that property for a while. And when you hold property, you have holding costs, which pulls away from your profit. So it's something that you guys need to understand. Each property you look at is going to have a different months of inventory, and you need to make sure you're aware of what that is. So when you're doing your scenario analysis of how much money am I going to make, when you're doing your best case, your worst case, your most likely case, which is what you should do in every situation, your best case might be, this is how quickly I'm going to sell it if I sell it on the average days on market, but this is how long it might take me to sell if I have to compete with everybody else here. So what you'll notice, for example, on this 12 months of inventory, and I didn't show the days on market, the days on market for $1 million houses, it's not 12 months, right? It's closer to 3 to 4 months. So especially as you get to the higher end, days on market numbers look very different, and so do months of inventory. Months of inventory represents your total liability as a real estate investor when it comes to, well, how long am I going to hold this thing? And how much money am I going to make based on those holding costs? City of Austin specifically is what this chart addresses. All the other sections we looked at were for both the City of Austin and Round Rock. This section actually just looks at the City of Austin. And it's even crazier in terms of both average price and median price. Median price in City of Austin, almost $400,000, which is up 13% year over year. Average price in City of Austin, $487,000, up 12% year over year. Days on market right now, just in the City of Austin, just 36 days, so even faster than the Austin Round Rock combination. Pending sales, our closest leading indicator of what closed sales will be next month, up 9%. Months of inventory for City of Austin is below that 3-month threshold. Again, this 6 to 6.5 months, this is what we call market equilibrium. Anything under 6 months of inventory, seller's market. Anything above 6 months of inventory, typically referred to as a buyer's market. At 2 months of inventory, it's a seller's market on steroids. Houses are going under contract above list price the same day it's listed, in some cases even sight unseen, because there's such little inventory of homes available for sale. It's so competitive, and that's another reason why you're seeing these average and median price increases in the double-digit range as they are right now. Condos and markets, we track those separately. They're a little bit of a different beast. We call condos the canary in the coal mine. Condos are the first market segment to go down when the market goes down, but they're the last market segment to go up when the market turns around and goes back up. So they will be the bellwether for single-family houses when the market starts to change and go down, but they won't be the bellwether for when the market starts to go back up. It will be led by single-family houses first. Last month, we did see a big increase in the number of condo sales. One of the reasons why we saw this big increase is because anytime a new section of a condo or a bunch of new floors open up, you'll see a big jump in terms of the number of closed sales. So you can't look at this number just on a single or an individual month basis. You have to really look at it over kind of a rolling or 2 or 3 month basis. And hey guys in the back, I see you standing back there. I see you against the walls. Some of you guys look super comfortable. But these seats here, like there's like at least 2 inches of padding on here. So if you guys want to come and sit down and join us, you guys are more than welcome. There's like 3. So if you guys want to get up here, you don't have to. But if you guys want to be comfortable, we got plenty of seats available for you. So we did see a big jump last month in terms of the number of condo sales. Year over year, however, closer to the teens. Median price, $269 for condos, up 7%. Average price, $314, which was flat year over year, but year to date, it's up 8%. Days on market for condos, 50 days. Months of inventory for condos, the same right now as it is for single family houses. What are some of the growth drivers that we're looking at for 2017? The big thing that affects us here in the Austin, Central Texas area is we've got somewhere between 170 and 200 people moving here a month? No, we wish. A day. A day. Yeah, all those people, just want to let you guys know, they're waiting for you. They're out on I-35, or they're out on I-35, or they're out on Mopac. They're just like, hey, we're just waiting for you guys. So they're all there. They're coming here, and they're coming here in droves, and that's one of the reasons why we're seeing such price appreciation, because when they come here, they're either buying or renting properties, which is in turn driving up that price. The Austin area saw a 6,100 person increase for the people who migrated over here I guess not last year, but over the last several months. Building permit data for Austin and Round Rock. This is the single family building permit data chart. It goes back to 1980. So you can see the big run up in terms of the savings and loan boom and the savings and loan bust that we saw. And you can see the run up that we have going up to the dot-com boom and the dot-com bust we saw. And you see the run up that we had going up to the credit boom and the credit bust that we saw. And you can see for a long time we were building less than about 8,000 houses. Our average, what it takes to really sustain us in terms of the number of people that are moving here on a daily basis and buying properties, is closer to this 15,000 mark. So even though in 2006, for example, we weren't selling 30,000 units in terms of the number of houses, we're still building less houses today than we did in the last market cycle. And that's one of the reasons why we're seeing so much upward pressure on price, because we have such little volume, such little inventory of homes to sell. Year to date, 2017, we've got 8,300 units in terms of building permits that have been issued so far this year. It is the highest number that we've seen since this Great Recession, but still not near enough to resupply our inventory and get us back to that 6 to 6.5 months of inventory. Why are people moving here every day? Some just move here whether they have a job or not, which I think is fascinating. But many people move here because they have jobs at one of these big companies that are expanding here. Merck and Company added 600 new jobs here in Austin. HomeAway added 2,000 new jobs here in Austin. And this is just for the month of July and June, right? If you take a look at even further, there are even more companies adding even more jobs. And again, that's one of the things that's building out this kind of organic growth, if you will, in the housing market in terms of the number of sales. This past year, Austin added 28,000 net new jobs, which was a 2.8% growth rate. It makes Austin and the Austin area the 17th fastest growing major metropolitan area. What made that up? Primarily transportation, warehousing, and utilities were the fastest growing in the Austin area. Education and healthcare added another big chunk, manufacturing jobs as well. And right now our unemployment rate in Austin is 2.9%. The government considers an unemployment rate of 6 to 6.5% full employment. So right now we are at double, if you will, full employment, right? If you cannot get a job in Austin, Texas, something might be seriously wrong with you, right? Just because we've got so many people that are, so many companies that are relocating or expanding here. How does Austin rank in the top 25 fastest growing metros? Right now we are number 17. You can see some of the other ones that ranked pretty high, so you'll see a lot of Florida, Vegas, some cities in California, etc. This is the top city in terms of the number of fastest growing areas in terms of jobs as a percentage of the total employment, what we're able to add, and it put us at a rank of number 17. This is how employment has changed since 2007. So you can see the 2007 boom, the 2007 bust, but then we've been on a streak ever since then. Unemployment rates, and I wanted to make this relative not just to what's happening here in Austin, but also I want to make this relative to what's happening in some of the other major cities around the state of Texas. You can see Austin has had basically the lowest unemployment since 2010. And it continues to kind of drop, and even right now is below that 3% mark, which is, again, above full employment. We got to full employment with the government. We called it full employment back at the end of 2011. You see this gray line here that's Houston. This is a result of all of the reduction in forces that the Houston market saw as a result of the oil and gas prices, where oil was trading at over $100 a barrel, and now oil is trading at less than $50 a barrel. As a result, it's had an impact in Houston in terms of their employment. Luckily for us, it hasn't affected us hardly at all. We're still moving right along. Again, this shows the unemployment rate in Austin going back to 2012, so you can see how we've kind of brought it down to the level that it is right now. Months of inventory, I think this is a very telling chart. It goes back to 2007. You can see this red line here. This is the Austin months of inventory. So you can see back at the top of our Great Recession where we had almost 7 months of inventory. And right now, remember, we've got about 3 months of inventory today. So back here, we were selling about 18,000 homes a year. Here, we're selling over 30,000 homes a year. Months of inventory in Austin is one of the lowest months of inventory in the entire state of Texas. Dallas is just slightly below us. Houston is slightly above us. San Antonio is slightly above us. And then obviously the greater United States is above us too in terms of months of inventory. The higher your months of inventory is, the less likely that you'll be able to grow that average and median price. When your months of inventory is as low as it is right now, that's why you're seeing these 10 to 15% increases in both average and median prices in some of the parts of Austin that we're looking at. Something that has really changed in Austin and throughout Texas really is the distribution of sales. What does that mean? The number of sales that we had of houses that were under $200,000 back in 2011 represented over 53% of our total sales were under $200,000. Today, that same number is only 20%. It used to be that houses 150 to 400 represented 55% of our total sales. Now that number is closer to 7%. So the distribution curve in terms of the number of sales has just gone over by about $100,000, right? And that's all the appreciation that we've seen in the Austin area, which is really great for those of us who have rental property, have seen some of this growth, and it feels really, really good. But it is making, some would say Austin's becoming, so everyone has always said about Austin, ever since I feel like I was born, that Austin's unaffordable, right? People have been saying that since the 70s, since the 80s, since the 90s, since 2000. And it's even more so today, but all of the markets in Texas are seeing this big growth in terms of average price. Let's see here. A couple notes about the Angelos Angelou forecast. Economy is growing at more than 3% a year. Any fluctuations that we're seeing in the unemployment rate, statistically insignificant. The rate has stayed close to 3% for the last several years. The housing market's equilibrium point in terms of the number of new permits issued, about 15,000 a year. Right now, last year we were at 13,000. Finally, we'll be over 15,000 in 2017, but it would have been more ideal if we were over 15,000 4 years ago, 3 years ago, 2 years ago, 1 year ago. We just haven't been able to pick up enough speed in terms of the number of permits that we've been issued. One of the big issues that we're seeing too is that preservation of that middle class. Everyone, if anybody wants affordable in Austin, happy to serve you with an affordable house in Austin. You just got to go to Pflugerville or Kyle or Taylor or Maynard, right, or Elgin. They don't like Elgin. But you've got to go someplace else to find affordable. There's nothing really in Austin. There's nothing really in Austin anymore like there used to be. They are proposing some city initiatives, but I will warn you guys about this. When someone says to you, we're from the government and we're here to help, immediately be worried, right? So it may not turn out the way that we think. They are saying that a lot of the middle class housing in Austin is completely going away. They're trying to do some things to make it a more livable city and keep Austin what we know and what we love, but it may be difficult for them to do that. They are implementing something called Code Next. I don't know that it's going to be any better than the code that we have. And we talked earlier about permitting, about how some projects take 4 months, some projects take 12 months. This is supposed to remedy that. I'm not convinced that it will do it, but it is something that they are actively working on. Guys, before we do the market update for multifamily, can I ask you guys, how many of you here are specifically interested in multifamily? How many of you guys are here specifically interested in multifamily? Okay, so I'm going to do a quick little presentation that specifically addresses multifamily, just so you guys can have an idea of where you can get some additional training for that. So give me 1 second, and I'm going to pull that up. So guys, what we've organized, and this is kind of something special, and for those of you who have been coming to the Real Estate Investor Association for a long time, you'll note that we've never put anything like this together, and we've never offered anything like this to our members. So this is kind of a special thing that we've been able to do to get and tap into some of you guys who are specifically interested in commercial and multifamily. We're doing a workshop on October 14th and 15th. We are doing it in Dallas. Why are we doing it in Dallas? Because we have specific interest in multifamily projects in Dallas, and we want you guys to be able to see them, to be able to touch them, to be able to kind of get to know them. We can't pick any of these projects up and move them here. What we've found is that multifamily investors, they don't have to invest in a specific area in Texas. They go where the opportunity is, and we've found a lot of opportunity in this particular market. So we're offering some specific training to get you guys up to speed on what it takes to be a commercial and multifamily investor. And what we found is this: investing in commercial and multifamily, you guys hear all sorts of ads on TV about wholesaling, about wholetailing, about all these different strategies, about buying and selling stuff on eBay, right? You hear all these different people talking about all these different opportunities, specifically really for real estate investing, but it's all around single family investments. None of it, you never really hear anybody talking very specifically around multifamily investments. And that's because it requires some highly specialized knowledge, and because there are SEC guidelines and rules that are associated specifically with pooling money, bringing investors together, and being able to offer these types of transactions. They can't do it on like a commercial road. You have to have a relationship with someone. You also have to have had an attorney put together these documents for you so that you can have a real offering in place that is in compliance with the Securities and Exchange Commission to make sure that you are not doing anything that goes afoul of the law. And because this is regulated by the SEC, and because it takes at a minimum $20,000 to create one of these securities, most people can't do it, and that's why most people can't offer it. And you also I can't stand up here and say, hey, I've got all these deals, I want to pull all of y'all's money because I want to help work with you guys to invest in these deals. That would be illegal for me to do that, except for those of you that I know really well and I've known for a long time, where I already have a previous relationship with. But for those who are new, very few investors really get an opportunity to really dig in and understand it and take part of and be part of any of these multifamily investing opportunities. So what we've done is we're really good at helping investors understand real estate investing, whether they're new or whether they just want to tweak the dial a little bit. We're really good at helping people get trained up so that they can become real estate experts. So this commercial summit that we put together will give you that knowledge, will give you that education so that you can become a sophisticated investor. Once you're a sophisticated investor, guess what? Someone can pitch you a deal and they can check you off on their box to say, yes, I've done my homework and this person is someone that I can actually pitch a deal to. So we've created something called the Keynote Major Incubator. This allows sophisticated investors to see and potentially invest in some commercial and multifamily projects. It provides funding for these multi-million-dollar commercial deals, and these are projects that we're doing here in the Texas area. We've created this network of investors because for us, we don't just invest here in Central Texas where we live. We also invest all over the state because we follow and go where the opportunities are. This is a Texas-wide network of acquisition specialists able to evaluate, because they understand these types of deals, negotiate, right, get them under contract. Which contract you use, you want to make sure you get the right contract with the seller and actually be able to fund these deals. This commercial multifamily workshop is for active residential investors who say, I don't want to do $100,000, $200,000, $300,000, $400,000 houses anymore. I want to be part of $2 million, $4 million, $10 million projects. This is for people who are ready to graduate from single-family houses and graduate to the next level. It's also for people who say, I have absolutely no interest at all in investing in anything single-family because I just want to go to the passive income streams. I don't want to be working on anyone's toilets or getting calls from tenants. This is a passive opportunity. So it's also for the high net worth passive investors and for those of you out there who are actively marketing for commercial and multifamily deals, right? So it provides that extra education and it provides that networking so you can get in front of other people that are actively looking for these types of transactions. During this summit, we're going to do an overview of commercial real estate investing just to kind of give you the foundation, that knowledge you'll need to be successful. We'll talk about finding, evaluating, funding, and acquiring commercial real estate in Texas. And we'll go over all the marketing, negotiation, and raising capital to be able to get the money to fund these deals. As part of this little workshop, on day one, we're going to take a bus tour of some of the commercial and multifamily projects that we are personally invested in. So you can look and see and feel and touch and get into and ask questions and wander around and figure out how the deal was found, how it was negotiated, how it was funded, and really get a feel for it so that you can feel comfortable with this. So day one, we'll do the hands-on live training, walking through these actual deals. And day two, we actually spend the time going through the overview. So now that you've seen it, now we're going to kind of put it all together and put all the paperwork, if you will, all the background so that you can get your own as well. As going to this workshop, you also get membership into the Keynote Major Incubator. This is our deal network for finding these types of investments here in the Texas area. And then, of course, you get to meet, learn from, network with, and join our commercial investor network. So, how do you qualify? Because not everybody is going to be able to do this. Only a certain number of people are going to qualify. You have to be able to do this, you have to have money to invest in a commercial deal. Because if you don't have money to invest in a commercial deal, then you're just I have an alternative for you. But you have to have that money to be able to invest in that commercial deal. If you don't have $25,000 yet to invest in a commercial deal, then you just need to go to our big live training event, that 3-day event that Phil talked about earlier. Go to that event, get your education there, get your knowledge there. Flip, wholesale, short sale, use any of the different strategies that we teach you to gain that first $25,000 so that you can invest in one of these commercial deals. And then I will say too, don't just come to the event thinking, oh, I'm just going to go to the bus tour. Or don't just come to the event, oh, I just want to go through the numbers, the marketing, the details, all that stuff. You really need to be able to put them together, and that, again, is how you become listed, if you will, as a sophisticated investor in our network. Here's what to do next. If you guys are interested, and a couple of you guys said, raise your hands if you, did you raise your hand earlier to say, hey, I'm interested specifically in commercial and multifamily? If you are specifically interested in commercial and multifamily, you guys can have that $25,000 liquid to invest in a deal, then you guys can come to this workshop. So you have to commit to both days, and then we've got some applications. So if you guys will raise your hand right now if you're interested in it, so we can get you guys signed up and get you on the bus tour and get you the education. You, yes? Anybody else? Anybody else? Okay, we've got a couple of people here. Will you go ahead and bring them some of the forms that we've got? So what we'll do is we'll give you the forms. We'll ask you to fill these out. After you fill them out, we'll come and grab them for you, and we'll buzz you out so that you can talk to someone on our staff about what this opportunity looks like. Guys, I got to tell you, at $197, I hope you all know, like, there's no profit in here for us once you get the bus, once you get the hotel to do the training. This is just to build our network out. This is just to build a group of sophisticated investors who are interested and are capable of investing in these commercial and multifamily deals. So I think that's it. Yeah. And now I'm going to go back to finish the market update for the commercial and multifamily, so you can know what that looks like, and specifically even what that looks like here in Austin in terms of what we're building, what we're putting on the ground, and what the forecast for what that's going to look like for us in the future. So to break that down for you, first off, I want to go over the building permit data for the Austin and Round Rock area. Again, this is the 5 or more families, and this is the multifamily. Again, this chart goes back to 1980 through today. So you can see the big boom and bust that we had in the early 80s. If you guys are wondering, why does every single apartment complex in Austin, Texas look like it was built in 1984? It's because it was, okay? Because that's when we were building so much multifamily. And a lot of what we buy was built in this time zone, right? A lot of what we buy, a lot of the opportunities are properties that are built in this time zone. So you can see after that big run up, we didn't build hardly any multifamily, and we've kind of been building it over time. And now you notice something very interesting. We're building more multifamily projects today than we have since 1984. But what's different about the ones that we're building today versus the ones that were built back here? These are all Class A luxury. These don't necessarily compete with what was built in this mid-80s time frame. So this is where we find a lot of the opportunity, and this is one of the things that we're going to talk about in the commercial workshop that we put together. When you look at vacancy rates for multifamily versus multifamily building permits, vacancy rates is one of the big things that drives multifamily building permits. As soon as someone sees the vacancy rates are really low, you can see there's an inverse relationship, right? So when vacancy rates are really high, like they were in 2009, look at the number of multifamily permits. Not much, right? But as vacancy rates started to get back to this kind of normalized range here, what do we start to do? Then we start to build more multifamily. But again, all the multifamily that we're building today is all of the Class A stuff that doesn't really compete with the stuff that we're looking at and investing in. The Austin apartment market stats specifically, you can see right now occupancy rates in Austin, 91.1%, which is really good, which is really high. And again, that's why you're seeing so much being requested for building permits. But here's something that's really interesting. So you don't just look at the occupancy And don't just look at the asking rent. If you look at the asking rent in terms of dollar per square foot, $1.42 per square foot on the apartments in the Austin area. What you also need to look at is the number of properties that are offering concessions. What is a concession? That's a free washer dryer, that's free parking, that's free upgraded, whatever it may be. That might be 1 month's rent. There was a 54% increase in the number of properties that were offering concessions last month versus this exact same time last year. These apartment complexes will offer concessions before they lower the rents. Concessions come first, rents going down comes second. This is not just happening in the Austin market. I'll show you some of the other markets around the state as well. This is the occupancy rate in Austin going back to 2001. So you can see back in 2001, this is the dot-com boom and the dot-com bust. So you see in 2001, occupancy rates were in the high 90s, right? But after the dot-com bust, you can see they went down into the high 80s. And you can see credit boom and credit bust, and then the current market cycle, which is where we are right here. So I want to make sure you guys look at this stuff, not just what's happening today, not just what's happening today versus last year, but what it looks like relative to the long term to really give you an idea of what the situation is going on here. I want to give you the stats too for not just Austin, but Dallas, Houston, San Antonio, Fort Worth. Austin has the second highest occupancy at 91%, just behind Fort Worth at 95%. Houston has the lowest occupancy at about 88%. One of the big drivers for that is, again, the oil and gas situation in terms of price per barrel. If you look at Austin, again, we saw that 20% of the properties were offering concessions. In Houston, 35% of the properties were adding concessions. Again, the concessions happen before the rents start to change, so they're kind of a leading indicator for us on that. So what does it look like for the forecast? What's going to happen in the economic environment in the city of Austin over the next 12 months? And I think that's the reason why many of you guys are here. Like, I want to know where this market's going because I want to know what I should be doing or how I should be changing my investing. This is describes the Austin business cycle in terms of growth. Back in 2007, you can see we were growing at 10%. In 2009, we were growing at -4%. We turned this market around in 2011, and it got above that 6% average, which is our long-term growth rate. We've been operating above this 6% average from roughly mid-2010 all the way through the end of 2016. But now we're starting to see a downturn. It's not a downturn, but it's below our historical average, okay? It's still great, but again, it's below that historical average for what we call that higher long-term growth rate percentage. So something you guys need to be aware of. Now I will say some people think, oh, well, the economy, well, that's going to lead the housing market. And the truth is that the housing market is usually, what do you think pulled us out here? The housing market. Housing market turns around first, and then everything else starts to follow. So be aware that the housing market is the thing that pulls, right? The housing market pulls us out of, and in fact, the housing market has pulled us out of every great recession that we've had over the last 30 years if you go back and study that data. Right now, growth in the Austin Business Cycle Index expanded at 4.1% annually, which is great. Again, we're just not at that 6% or higher. So it is its slowest pace since the early stages of the economic recovery in 2010, and it is below its 15-year average of 6%. We're seeing job growth. We're seeing companies move here. We're seeing companies expand here, but we're not seeing it at the same level that we saw from 2011 through 2016. The economic indicators in Austin have been modest in the most recent months, but still, again, very strong. Let's see, the area jobless rate remains, again, that 3.3%. a percentage point below the nation, ranking Austin among the top 10 metro areas nationwide with the lowest unemployment. Again, it's the quote I like to use is when Yogi Berra says, "The future just ain't what it used to be," right? It's good. It's just not as good as it was 2 years ago, right? But it's still very good and still very strong. So the forecast for the rest of 2017, we're looking at a year-over-year sales increase in the 3 to 5% range. Could go even higher, but based on the amount of inventory we have, it's going to be hard to kind of push above that level. And then we're going to forecast an average price increase of at least 5 to 7%. This will probably go higher, just because, again, the lack of inventory situation that we have. But it's still very strong finishing out 2017 and very strong going into the first half of 2018. We'd love for you guys to get more information from us. Every month we do 2 meetings a month. Every month we have a different keynote presentation. This month specifically focused on the market update and the market forecast, but all the other months we're usually talking about different strategies to buy and sell real estate. And we meet, our next meeting September the 5th.